if we're right, that assumption alone, I have been in the markets for a long time, and as new asset classes evolve, what institutions do in particular is they tiptoe in. They start with 1%, and then they migrate to 2, and then they migrate to 5. So I think in this one, it's 2.5% for the base case. When there's a new asset class, it tends to end up in the 5 to 6% range. This happened to real estate. It happened to private equity, venture capital, which is now much more than 6% in many institutional funds. It happened to the whole category of emerging markets. And so I think it's that one alone is very conservative. And if you look at another one, the corporate balance sheets, Tesla, Square have Bitcoin on the balance sheets. But we make very cautious assumptions, and I think the corporate treasury assumption is 2.5% of all cash and cash equivalents in Bitcoin, and the bull case is 5%. If we're right, and the purchasing power of Bitcoin becomes so obvious in the years ahead, meaning the purchasing power goes up instead of cash, dollars, staying pretty flat, if not in real terms deteriorating, then more and more corporate treasuries are going to be putting Bitcoin on their balance sheets. And in fact, they'll be the analysts will start questioning them. Why do you have 95% of your cash in a depreciating asset when you could put it into a cash equivalent like Bitcoin and have an appreciating asset? So
Cathie Wood's vision of a $1 million valuation for Bitcoin by 2030 is, in her estimation, a rather conservative projection. Rewind to early 2018, when Cathie Wood and ARK Invest ventured into the realm of bold predictions by asserting that Tesla's stock would soar to $4,000 by 2023. At the time, this prediction was met with skepticism and laughter from many analysts and investors. It was seen as not only highly optimistic but, to some, downright unrealistic. However, Cathie and her team stood firm, believing they had discerned something others had not. Fast forward less than 3 years, and in January 2021, Tesla's stock was indeed trading at $4,000 per share on a pre-stock split adjusted basis. Cathie's seemingly unrealistic prediction had materialized 2 years ahead of schedule. Now, Cathie Wood and her team have ventured into making another set of audacious predictions, this time centering on Bitcoin. In their 2023 Big Ideas presentation, they unveiled 3 price targets for Bitcoin: a bear case of $258,000, a base case of $682,500, and a bull case of $1.48 million. Although the deadline for these targets is set for 2030, Cathie recently expressed her view that these forecasts are, in fact, quite conservative. Her rationale lies in the underlying price models, which employed rather conservative assumptions for institutional investment in Bitcoin. As the video unfolds, Cathie delves into her Bitcoin price predictions and explores the potential impact of the forthcoming spot Bitcoin ETF on the cryptocurrency's price. It's a compelling narrative that highlights the dynamic nature of financial markets and the role of bold foresight in shaping investment landscapes.
I first describe what it is, and I ask them to listen very carefully to each of the words that I'm saying. It is the first global, private, meaning no government intervention, rules-based, if I didn't say digital, I should say it now, digital monetary system that the world has ever known. It is a very big idea. And in fact, what I often do is describe what Art Laffer said to me after he finished reading the paper. And, he basically said, I think I might have mentioned it, I've been waiting for this since they closed the gold window. Monetary policy has been completely unhinged. There's no discipline. We're going through booms and busts that are completely unnecessary. And I did say to him, I said, if we went back to a private money, and I'll get back to how we help people understand this. He's very excited about a private money, but in studying the history of private money in the United States prior to the Fed, 1913, I said, but art, that was a period of booms and busts. And he said, yes, but they happened very quickly. What we're doing with monetary policy right now, they happened quickly back then without a terrible amount of damage. What we do these days is plug the dikes and make one monetary mistake after another, and we end up in a global, massive crisis that takes years to get over. So that was interesting. And I did say at the time, I said, well, art, if this is such a big idea, how big is it? And he said, well, how big is the U.S. monetary base, the reserve currency's monetary base? Back then it was $4.5 trillion. Today it's $8 trillion. He said, there's your answer. There's your answer, how big this could be if this is going to become an effective global monetary system. And so we ran with it, and we have not stopped running, because you're right, we have just begun. And it is interesting to note that, we're up to 19 million Bitcoin, and we're going to 21 million. So the scarcity value argument, the store of value, is going to resonate even more, because I believe when the SEC does relent, and it will, now that Chairman Gary Gensler is calling, the controversy around the Bitcoin ETF his personal Vietnam. So he probably wants to get rid of it. Our COO, Tom Stout, feels that we will have, not we, maybe many people, many firms will be approved for a Bitcoin ETF. And when that happens, that will bring with it an institutional acceptance that really could highlight the scarcity value of Bitcoin. And institutions are not the only story. Thank you for reading our Big Ideas 2023, and in there you see our building blocks to a $600,000 to $650,000 price, and perhaps $1 to $1.5 million price by 2030. We think most people in the world, at the very least, should have some of their assets in Bitcoin as an insurance policy against confiscation of wealth. And that can happen in a number of ways. It can happen outright. So to see MBS in Saudi Arabia lock his cousins up in the Ritz Hotel and just take their wealth, that's confiscation. That's outright confiscation. And then, of course, there's inflation, which is also confiscation of wealth. It's a cruel tax. It's very regressive. And Bitcoin would be an important hedge against that for anyone, but especially for lower income people. So now with the ETF, what is going on? I think, we know the research people at the SEC, and they know what they're talking about. They are really good. We've met the head of FinHub now, who reports directly to Chairman Gensler. And for me, the disconnect is they know so much and they are so good that I believe this was much more Gary Gensler standing in the way. I don't know for sure, because they could never say something like that. I just know from how we have discussed Bitcoin with them, that they really understand it and they understand its merits. Most important. So this is Gary Gensler. Why he allowed, and I will say he because I think he's the gating factor here, why he allowed a Bitcoin futures ETF, which involves counterparty risk, and not a Bitcoin ETF, which does not involve counterparty risk. In fact, it is backed, ours would be backed by Bitcoin 1-for-1 in cold storage at Coinbase. That's why Grayscale has won its case. It is that argument. And so I think Gary Gensler's personal Vietnam is coming around to haunt him. I do think the SEC is moving now. He has, in effect, said, hey, I'm not the only decision maker. There are 5 commissioners here. That means some of the research that we believe is percolating up to those commissioners might be getting through to them and might be the grounds now for the approval of a Bitcoin ETF. And we don't think that the SEC will approve just one. They will probably approve a group of them. And that means it will become a marketing battle. And we do hope that our research, how much we give away our research, mostly because we feel it very important to educate. It's one of our mission and values. We hope that helps us as we, hopefully being one of those approved, go out and start marketing.
I really want to hit that $1 million price prediction by 2030. And I have your chart that I pulled up from Big Ideas. I'll probably put it up on the screen if you're watching this on video. The bear case is 258,000 per Bitcoin. The base case, 682,000, and the bull case, 1.48 million as your price target. Can you talk to me a little bit about how your team reached this conclusion? Because folks out there, again, they think they're late, but this shows that, the compounded growth rate every single year, they're very, very early, and this has a huge asymmetric potential.
Yes, if you look at the little table on that page, you'll see the building blocks and how conservative they are. I think, now this is from memory, and sometimes I get one Big Ideas and another mixed up, but I think the institutional allocation to Bitcoin in the base case, I know at one point we said 2.5%, that may have gone down a little, but if we're right, that assumption alone, I have been in the markets for a long time, and as new asset classes evolve, what institutions do in particular is they tiptoe in. They start with 1%, and then they migrate to 2%, and then they migrate to 5%. So I think in this one, it's 2.5% for the base case. When there's a new asset class, it tends to end up in the 5 to 6% range. This happened to real estate. It happened to private equity, venture capital, which is now much more than 6% in many institutional funds. It happened to the whole category of emerging markets. And so I think it's that one alone is very conservative. And if you look at another one, the corporate balance sheets, Tesla, Square have Bitcoin on the balance sheets, but we make very cautious assumptions. And I think the corporate treasury assumption is 2.5% of all cash and cash equivalents in Bitcoin, and the bull case is 5%. If we're right and the purchasing power of Bitcoin becomes so obvious in the years ahead, meaning the purchasing power goes up instead of cash, dollars, staying pretty flat, if not in real terms deteriorating, then more and more corporate treasuries are going to be putting Bitcoin on their balance sheets. And in fact, they'll be the analysts will start questioning them. Why do you have 95% of your cash in a depreciating asset when you could put it into a cash equivalent like Bitcoin and have an appreciating asset? So remittances is another very big market. We assume 10% of remittances in the base case and 25%, instantaneous, no fees or minimal fees compared to 8% fees as migrants send back to their home countries. Sovereign treasuries, 1%, only 1% in the base case, 5% in the bull. Just like corporate treasuries, they'll be under pressure to start increasing their exposure to Bitcoin. And emerging markets, not just the state treasuries, but all of the populations who are subject to these swings in their currencies and absolute demolition of their wealth when they go through hyperinflations. We assume 3% of the populations in the emerging markets, 3% of their assets in the base case go to Bitcoin and 10% in the bull. So those are some of the cases. And then there's the other utility economic settlement network case, and that's 5% of all settlements in the base case and 10% in the bull case. So that gives you a sense of how we have built those two estimates, and those are pretty conservative assumptions, we would suggest.
Cathie Wood's insights and predictions for Bitcoin as we look ahead to 2030 carry significant weight, particularly when considering the impressive track record of ARK Invest and their bold 2018 forecasts for Tesla's performance. It's a moment that invites us to pause and deeply contemplate the myriad possibilities that lie before us. Regardless of whether you maintain a bullish or bearish perspective on Bitcoin's future, it's abundantly clear that we're standing on the brink of transformative times within the cryptocurrency space. The profound impact of digital currencies on the financial landscape is undeniable, and Cathie Wood's projections serve as a compelling testament to the profound shifts that may yet unfold in this dynamic domain. The crypto sphere is evolving rapidly, and Cathie Wood's forward-looking insights underscore the potential for substantial change in the years to come. With innovative technologies and novel financial instruments emerging, the crypto market is poised for transformative growth, offering both opportunities and challenges for investors and enthusiasts alike. As the crypto landscape continues to mature, one thing remains certain: we are entering a period of extraordinary change and innovation, making it an exciting and pivotal time for those engaged with digital currencies. Whether or not one subscribes to Cathie Wood's particular vision, her forecasts serve as a poignant reminder of the ever-evolving and dynamic nature of the cryptocurrency realm. In this era of significant regulatory developments, market maturation, and growing institutional interest, Bitcoin's trajectory has profound implications for the broader financial sector. As the cryptocurrency industry advances and adapts to these changes, it holds the promise of redefining traditional financial systems and challenging established norms. Thus, whether one embraces the opportunities Bitcoin offers or remains cautious about its future, it is undeniable that the crypto space is on the cusp of remarkable and transformative times. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.